All right, good morning, everyone. This is Brian, and we are here today for Forex Live. Today is Wednesday, August 21st. God, it seems like it was just the start of August. I don't know why the days are going faster and faster this year, but they are. And we're here for Forex Live. So what we're going to be doing today, same thing we do during all of our live classes, is we walk through the daily regimen and identify trades utilizing that methodology and Forex Joe's daily report. So what's happened here is Forex Joe put together a trading methodology for us, calls it the daily trading regimen. Looks like this. So our members all have this, and this is just kind of this form, and again, this is probably a repeat for some of you guys. I know we have a lot of new people on those, so I'm going to take a little bit of extra time just to explain what we're doing. And what this does is this form basically keeps our finger off the button to make sure that we're gathering all the information that we need to have so we can make an educated decision on where we want to place our trades in the marketplace. It also serves as a trading log for us, which is very important. So, you know, you've got a few things here. You've got a step-by-step method that you can do consistently and trade the same way every time. That's very, very important. Consistency is key. Secondly, it keeps your finger off the button until you gather everything you need. And thirdly, it serves as a trade log. And the trade log is key as well, because you should know why you're in a trade, and you should be able to talk to that. Also, if you need to go back and analyze your trade, you know why you entered it so that you can make adjustments if necessary. Just because the trade loses doesn't mean it was a bad trade, by the way. You know, you're going to have losing trades. You can do everything right on the setup side of things, but still have a losing trade. There's no way to win 100% of your trades. But what you can, by gathering as much information as possible up front and using a standardized method, you can be consistent in your trading, and then from there you can have, you know, you're taking a little bit better trades, probably taking fewer trades at that point, and you can have a better chance for success. So what we're going to do is I'm going to use this, and I'm going to start with the Euro USD and talk through that. And so we're going to go through the Euro USD, the Pound USD, and then the USD Yen for our trades that we're going to place here in class, and just utilize this methodology. Now, obviously, you can apply the same thing that we're doing to any other currency pair out there if you happen to trade other ones. These are just the ones that I trade typically in class. So we'll spend a lot of time going through the euro, because I'll talk about what I'm doing and why I'm doing it. Then a little bit less time on the pound, and then a little bit of less time on the USD JPY. The methodology, once you have it down and once you're using it, it shouldn't take you more than 10 minutes or so in the morning to go through and set up your trades. It just takes a little bit longer because I'm going to talk about and explain everything that we're doing and why we're doing it. Okay, so the first thing we're going to do is reset our chart, and we're also going to capture the current price. So I'm going to reset my chart just to get those other lines off there. And we're currently trading on this euro at 33.79, call it 33.80. So we're currently trading 33.79, 33.80 area on this Euro USD. First thing we're going to do before we look at anything, although I see a nice setup right here that we may have just missed out on, but you know, that's the point of having class, and we'll get to what's happened. But let's go ahead and gather some information here. We're going to gather our channel information, then our support resistance levels, and just go through that daily regimen for live trading. So first thing we're going to do is we're going to pop over, and we're going to gather our channel information. And I get that from here, from our daily report. You can get this by doing the math on your own. I mean, you can look out to your longer term charts, your weekly charts, and then drill down to daily charts, and then down to 4-hour, 1-hour charts to get to figure out where your channels are. But this is nice because Forex Joe's already done it for us. So I like to utilize the daily report to do this. It just makes it that much quicker and takes that much less time when we're trying to figure this out. Also, if you're trading intraday, you can put new lines in the chart each morning real quickly versus having these lines already existing, for days and weeks, which can get kind of cluttered and confusing over time. So first thing I see here is I'm going to work off of this is our daily channel. So we see a daily channel bottom at 33.69 and a channel top at 34.97. So 33.69, 34.97. as our top and our bottom. Now, I really like it when we see these daily tops or daily bottoms lining up with weekly or monthly channels as well, because that gives us some additional strength to that area. What we do see here above us is that we see the weekly and monthly channel bottom is 33.29. So we do see a key level that's lining up there, 2 of 3 channel down here at 33.29. So just a number to kind of, write down, put in your back pocket there, just in case we see price push down to that level. So might keep that. On the upside, no real alignment here, so I'm not going to worry about any additional numbers up there. Next thing we're going to capture is our support and resistance information. So we're currently trading at 33.79, 33.80. So what do we see around here? Well, we're kind of in the middle, but we do see above us at 33.96, we have a resistance area. And then down below us, we have 33.69 as a support area. 33.69 support, it also aligns with our channel bottom. If we break through that, then our next number of the sequence is 33.29, which is a 2 of 3 channel, and definitely an area to watch. If we go to the upside, if we break through 33.96, then our next stop up is 34.50. And if it really has some power, maybe 34.97, which aligns with that channel top. So a couple of numbers there to watch. 33.69 though, strong level, and then 33.29 if it breaks through. Next thing we want to find out is, are we trending or are we oscillating for the day? What's happening here? Are we trending or oscillating? And it looks like, really it looks like we're in a little bit of a, what is that? I don't know if you guys heard that. I don't know if that came through the speakers or not. I just had this ad that just popped up and freaked me out. So the next thing we want to find out here is, are we trending or are we oscillating? And it looks like really right now in a little bit of a downward trend for the morning, although from a definition standpoint, Forex has always told us we're moving less than 60 pips in the day on this euro. We're really oscillating. But it does have a downward trend to it. The next question, though, the big question is, have we broken out of the channel? Have we broken below 33.69 or above 34.97? And the answer there is no. We have not broken out of that channel. Next thing we're going to capture before we start looking at trades is, what's our average daily range? What's our ADR? And today we've moved 51 pips so far. And our average range, if we look at a short period, the last 5 days or so, is about 90 pips. And if we look out to 130 days, it's about 100 pips. So we're about a 90 to 100 pip range. Sometimes it goes a little higher to that 115 range, but 90 to 100 pips right now, 105 even on the top end. And that's, we want to know this because, for instance, yesterday, for example, we were up here. We were saying, okay, what are the chances of it moving further? If you're at 100 pips already for the day, if you're already at 100 pips, which would be here, and you're seeing a setup, and you're looking for longer term, big moves of 30, 40 pips, you probably wouldn't want to take a trade there. I mean, scalp trade, sure. But the probability of it going higher is pretty slim. And what ended up happening, it did push a little bit beyond. It pushed up, past that average range, but then it came right back down to it and just oscillated for the remainder of the day. So ultimately, we look at this average daily range because what we don't want to do is get into a long trade at the very top of a range or into a short trade at the very bottom of the range. So it kind of keeps us out from making a decision that may not be that may not have the highest probability of taking off in the direction that we'd want it to. So that's why we look at that. Next thing we want to capture before we really jump into things here is news. What's happening? Do we have any news that's coming up? What news has occurred for the day? And the ones that we're most concerned about are these red reports. And we have a couple of red reports today that are coming up. We've got this existing home sales report, which comes out at 10 Eastern. That's about an hour, about 50 minutes from now, and that's a big one. But we may not see too much until after these FOMC meeting minutes. This will be a big one. So any of these red reports that are high impact reports doesn't mean you can't trade because there's a red report. But if it's 5 minutes of the report time, you probably want to wait. If you're 40 minutes, half hour, and you got a little bit of time for, depending on what it is, and you got some time to scalp a few pips out of there, sure, But what you don't want to do is look for a long-term trade right in front of one of these red level reports, high impact level reports that's coming out. So we check news just to make sure we're not stepping into something that we don't need. But let's note it. We've got 10 a.m. home sales. And by the way, I'm filling out that form I showed you earlier. I print one of these out every day and fill it out. So we've got 10 a.m. home sales, and then we've got 2 p.m. FOMC, and that'll be the biggie, that FOMC. So we may not see too much until then, but we'll look for a couple of areas and see if anything plays out for us. And the last thing that we want to do before we start trading is we want to capture what's happening here in our futures market. I don't know what's going on with my my laptop today. It's funky. I'm telling you, man, these Windows boxes have about a year lifespan. That's about it. I really don't like them. I'm a Mac guy, so I'm kind of anti-Windows. I use my Mac for most things, and I have a separate PC that I trade from. When I travel, I do everything from my Mac, and it seems to just work that much better. But it is what it is. I digress. So we're over here looking at the futures market, and the reason we're looking at futures, even I know we're trading Forex, why futures? The reason we're looking at futures is because there's a direct correlation here. When we see money flowing out of the Dow, out of crude, out of gold, out of silver, so basically, out of your majors here in the futures market, you see money moving into U.S. dollars. That's because we're cashing out positions here, and we're holding them liquid here in USD. Conversely, if we see money flowing into the Dow, into crude, into gold, into silver, we're cashing out these liquid positions. We're taking these positions from US dollars and putting them back into other things, and that's why we see kind of a direct correlation here. So if right now today we're seeing the Dow's down, we've actually broken below 15,000. That's a major level for us, by the way. So we see the Dow's down, crude's down, gold and silver are down, and we're seeing dollar strength. That's how it should look typically. So we've got a negative futures market, and we've got positive dollar. Sometimes you'll see negative market, and you'll see the dollar just hanging around zero, or maybe even moving down too. And those are days that you want to trade even a little bit more cautiously, because it means that something's going to pop one way or the other, and you just want to be careful there when you see that occurring. Today it's looking exactly like it should. We see negative futures and we see positive dollar. That's what we should be seeing. Well, it's not what we should be seeing, but that correlation, one negative, one positive, or converse or inverse of that. All right, so we've gathered all of our information. We've got our current price at the time. We gathered our channel information, our support resistance levels. We know what the market's doing, if it's trending or oscillating. We know what our average range is so that we're not jumping into the very top or the very bottom. We know what news is coming up, and we know what the futures market is doing, how that's leaning, and what we might see for the day for dollar strength or dollar weakness. So we've gathered a lot of information, and now we can take that and translate it into some potential trades. So the next thing we're going to do is we're going to pop over to our charts, and we're going to have a look at what we've just gathered here. So as we can see, we haven't moved a whole lot. We've moved a few pips, here just in a little bit from where we were, but nothing to be too concerned about. Channel, let's put that on first. We've got 34.97 for our channel top, which is way up here actually, 34.97. So we've got our channel top up here, 34.97. And then we'll throw a line for our channel bottom on here at 33.69. Right about there. And then we can put this back to actually see what we're working on. All right. Next thing we captured was our support and resistance information. And we see that we have resistance above us at 33.96. And we see support down below us at 33.69, which we already have here. And then if we broke below that, we've got 33.29, which is a major area. We could throw that on the chart. And this is a 203 channel. Just depending if you wanted to, you could go in and you could color code this guy if you wanted just say, hey, this is a bigger level. You can go in and you can color code it as a red or a yellow or whatever, just so you take note if price gets there. So we could color code that. And if price broke above this 33.96, then we've got 34.50 as the next stop above it, which is right up here, right up there. So that's what we've gathered. Next thing we want to do is just have a look and see, okay, well, we really see this 33.96 setting up as a pretty solid resistance level above us. You know, is there another level that we've been seeing as support beyond that? So this is what Forex Joe calls compressing the channel. So, you know, we can look through and for the day so far, is there another level that's been setting up as support? We see that really during this London session. So, you know, we're in London. The U.S. is starting now. So, you know, London began here, and it rolls here, you know, until about noon our time. And we see, you know, now the U.S. session's on board as well. But really, during this London session in the U.S., we've seen a pretty darn tight channel setting up here between this 33.96 and 33.85. So we're really seeing this setting up very, very tight channel, and that's to be expected. You know, we've got 2 red reports coming out today. We might see some movement, maybe a whip on news, a spike one way or the other, and then it'll just consolidate again until the UFOMC, more than likely, you know, more than likely. Of course, we can't trade on what we expect. We can only trade on what we're currently seeing. And so now we've gathered our information, we've compressed our channels, we put some lines on the chart. So now we figure out, okay, well, where are we going to be? Well, we're seeing, you know, strength right now, you know, stronger dollar. So that's telling us that we want to maybe look at some sell opportunities. So we might pop right up here to this 33.96. Now, typically in a range-bound market, you're going to see price test an area or bounce off of an area more times than you will in a trending market. So you know, you're probably saying, well, gosh, Brian, we've hit this 33.96 a few times. Is it going to get back there? Well, you know, it might not. You know, but you've got a higher likelihood right now of that happening. You know, typically in a trending market, I would probably look for a break here and then a retest of this area and do a sell off of this. But I'm actually going to sell up here off of this 33.96, you know, to see if we can get back there, because we are oscillating right now. We might see it pop up a little bit and then come back down. So I'm going to sell off of there. And what we'll do is we're going to look to keep our risk pretty darn low. You know, we don't want to risk 50 pips to make you know, 10. So we're going to keep our risk fairly low. And what I'm doing is, you know, we kind of see a little bit of a level. It's not much. We had a support level here. If we drew a line right through here, you'd see it. And we had support. It was, you know, support, broke it, resisted there. So not a real solid level, but there is kind of a level of support or resistance here. So I'm going to hide behind that. And so I'm going to hide behind that level for my stop loss. I'm going to place my entry here. I'm going to look to take profit at this this next level down, and then where's my second take profit? And then I'll set my second take profit right down here at this channel bottom, and then I'm going to simply click and move to sell. Now, here's my caveat on this one is, you know, if this doesn't hit prior to that that 10 o'clock news, then I'm going to cancel out. I don't want to be in this trade waiting for it prior to news. So, you know, I'm looking for something that in the next 40 minutes, really less than that, is going to click in and give us an opportunity to maybe pull a you know, 10 pips or so off of this and then be in a risk-free trade. If that doesn't happen, I'm going to cancel it and not just, you know, hold my breath for what might happen during news. Then I'll look for new entries following that 10 o'clock news event. So I'm going to enter a sell order here. Typically I do a buy and a sell, but today I'm just going to enter a sell order on this this Euro USD. And now later today, after news occurs, after things settle down, we'll watch some other areas, and just depending on what it is, what I'll be doing is kind of your standard support resistance level of trading. Is we're going to use these key areas that we've put on our charts already today, and after that 10 o'clock news event, when price moves, just because it will move at that 10 o'clock event, we'll see where it's currently trading. If it breaks through one of these key areas, we'll look for it to, let's say it breaks above 3,400, right? Let's say it breaks above 3,406. It breaks above here, I'm going to look for a candle to confirm it, and then I'll buy it on a retest. If we break down below this 3369, we break below it, I'm going to look for it to break below, confirm with another red candle, and then I'll sell it on a retest of here. But I'm not going to do that knowing that we've got news coming up in 40 minutes. I'm going to look for one trade, and a trade that has a higher probability of maybe retesting this area and getting us into some pips prior to news. After 10 o'clock, it's kind of back to a different type of trade. So right now we're in a trade. No, we're in a trade. Well, I guess we are. We entered a trade. So we have a trade on right now at this at this resistance level up here at 33.96. So we're in a sell order here, and then after news, I'm going to be watching to see a breakout either of 3,400, 3,406. We're going to look for potential buys off of that, or we'll be looking for potential sells off of 33.67. But that'll be after news, and we're going to look for the standard way of trading, which is move, confirm the move, sell on a retest, move, confirm the move, buy on a retest. So those will be the two levels I'm watching post news. All right, next thing we're going to do. Any questions about what I just did or why I did it? The setup, by the way, that I was mentioning there, and we see this quite a bit, was this one's not moved quite enough. Typically, if you see price move beyond this Asia high or Asia low, by 10 or 15 pips during London, price will flow back. If it floats back, it might retest that Asia low. That's a great entry point, by the way. So just keep that in mind. Sometimes if you see price float down here and then it floats back up during this first part of the U.S. session, great entry is off the Asia low or the Asia high. I'm not really seeing that today. It's kind of consolidated until we get this news event. All right, so pound USD. Current price trading at 56.83. So currently 56.83 on the pound. Again, first, and we'll go a little bit faster on this one. What we're going to do is look for our channel information, and channel is telling us that we have a daily channel bottom at 56.46, and we have a channel top at 56.95. That's a key area, by the way. If you see 56.95, that is a 2 of 3 channel. So 56.95 is lining up on the short term and midterm as a channel top. So big area for us to watch there, 56.95. Next thing we're going to do is collect our support and resistance levels. What do we see here for support and resistance? Well, we're currently trading at 56.83. So what do we have? Well, above us we have resistance, 56.95, and that lines up with that channel top. Now, if we break above there, we have 57.15. If we break back below, 56.61, and then 56.46, which is our channel bottom. And then so on. If we go either direction, you can read that for yourselves. Next thing we want to know is has the trend been? Are we trending or oscillating for the day? Really, we're oscillating. We're an oscillating market here on this pound. Has the channel been broken? Have we broken above 56.95 or below 56.46? And the answer is no. We kind of did. We dipped our toe above it here, and really just came right up to that 5,700 area, but we have not closed above 56.95. So channel's not been broken, been pierced, but hasn't been broken. Average daily range, well, we've moved about 50 pips for the day. It's not much considering that, well, here recently, we look at this short-term range for about 77, on the 5-day range, 77 to 80 pips. But a little bit longer out, a little bit further out, looking at this 130 days, we're about 120 pips, 100 to 120 pips on that. So, we're somewhere between 80 and 100 pips right now on this on the ADR for this pound USD. and we've moved 50, so there's definitely some room for us to move again. News, yeah, we know that there's definitely news coming up. We talked about that earlier. And then next thing we want to check is what's the futures market doing, and we won't have seen a lot of change in the last few minutes, but we might here in the next 10 or so, 10 to 20 minutes, probably closer to news, top of the hour. Keep your eye out here, because as our floor traders at the Board of Exchange come on board, you may see some movement here. But right now, man, I don't know what is up with that. I guess I have to restart my computer. Right now we're seeing, the big news is the Dow's broken 15,000, and 15,000 is a major area for us here on the Dow, and could really, if we stay below this, will cause some dollar strength. If for some reason it rallies above, then look for some significant weakness for the day. Anyway, but right now below 15,000, big level. I'm sure Forex Joe will talk about that a little bit later. So anyway, not seeing a whole lot of difference here in the futures market. So last thing, so now we've gathered our information, so let's go ahead and put on a trade. Again, we've got news here in just a little bit, so not really eager to look at buys and sells. I think we may have actually missed our trade, which I should have just entered prior to coming in class and talked about it, which was off of this 56.95. Major area for us. We actually traded a sell off of it yesterday. It never came in and hit during our class, so we shut that trade down, and we traded down here for the day, floated back up, and gave us a couple opportunities today to pull some pips over this last session. Big area there, 56.95. If we can float back up there again prior to news, great spot to look for a sell. Although I just I don't know if we'll get there in the next little bit before we want to shut down these trades if they don't hit. So 56.95, we've got a resistance point up here. What else do we have? We've got 56.95. We've got 56.61 down here below us. And we've got our channel bottom at 56.46, which is right down here. So if we can get back to this level, great spot to look for a sell off of 56.95. However, don't know if we'll actually get there prior to this news. And I don't want to be in a trade, have an open trade, just sitting there, with news coming out. So we'll enter it, and if we can, hit it, if we can get back up there, we'll see if we can grab a few pips off of it. It'd be nice. We'll keep our stop loss pretty darn tight on this. So we'll do that. So if we can get there, great. If not, no sweat. We'll just shut it down prior to the news occurring. So got that trade. We'll put that one on. What I'll be watching with news is really a couple of things. See what the futures market's doing, where it's taking us. But kind of consolidating this channel here, we'll be watching for a couple of things. Number one is if we break above 56.95, we'll look for a break above and then confirmation of direction. Then I'll buy it on a retest, and then I'll look for the same thing down here at 56.80. Is break below, confirmation of direction, and then sell it on a retest here. So I'm going to be watching 56.95 and 56.80, so 15 pip range here for a potential buy and a sell following news, and that's what we really want to watch. Is we've got a trade that could potentially get up there and get us some pips, but in all likelihood, we're just going to range here until 10 o'clock when the news event comes out. And then we'll look for a breakout one direction or the other off of these levels. So then the last one we'll do, and I'll turn it over to Forex Joe, is the U.S. yen. And same thing here. We did get some pips yesterday on this U.S. yen. All total about 25 pips, 26 pips. Let's just go ahead and reset the chart so we're fresh. And U.S. yen currently is trading at 97.57. So USD JPY 97.57, and our channel information on this one lets us know that we have a channel bottom. Oops, a little bit too much. We have a channel bottom at 50, stuck on 50s for some reason. 96.60 as the channel bottom, and 97.40 as our channel top. 97.40 is our channel top, and that's a 2 of 3 channels, so a little bit stronger area there, by the way, 97.40, and we'll see how that's looking in a second. Another big area, 93.15, and we know 99.67 has been a big number for us here to the top side. All right, so currently trading though at 97.57. So what's that letting us know? Well, we know that above us we have 97.76 as resistance, and we've got 97.38 as support. If we broke below that, 9,700, no surprise, big whole number. We know that those whole numbers are typically a great level to look for entries and for bounces, because you know, typically that's just a good psychological level where people like to trade from. Next thing up, if we break above 97.76, we've got 97.85. All right, so let's have a look here. Are we trending or are we oscillating for the day on this USD JPY? Well, really we're oscillating, yeah, a bit here as well. Although so we're oscillating with a little bit of a trend up. Has the channel been broken? That's probably the biggest question here. Have we broken below 96.60, or have we broken above 97.40? And the answer is, well, yeah, we did break above 97.40. We hit it, we resisted, popped down, broke above, rejected. Now we broke back above, and we've seen this channel top really set up as a resistance level so far for the day at 97.40. So you definitely got support level now. So we've what was resistance is now support. So we're seeing support, broke it, support, 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 support. So this has been a big level of support for us here at 97.40. We're about 30 minutes out from this news event, so I don't think I'll look at entering a quick scalp trade. But let's just look at what our levels are. We've got 97.40 right here. Above us, we have 97.76 as the next level of resistance, and that would be up here. Right there, 97.76. If we want to compress this channel a little bit, we're actually seeing, we're seeing price struggling here. We actually just broke above, so we may see, just kind of setting up with this Asia high as being a channel top here. We'll see what happens. Definitely seeing some U.S. strength against the yen, so we may just totally break out of this and move on. I'll be watching this 97.51, for potential pullback. Depends how high we go before news. But 97.51 for potential pullback would be a great spot. We saw it setting up, maybe even a little bit higher, maybe this 97.60. We saw this setting up as a nice resistance area through here, and we've broken it. We'll see how this candle closes. If it pulls back and retests after news, this could be a great spot to look for an entry. But we need to wait for news at this point. We're about a half hour to it. If you're looking for a scalp trade, there's probably still some opportunity, but I don't want to just jump in willy-nilly. I like to be a little bit more conservative and take fewer trades. So I'm going to wait on this one, but I'm going to watch 97.64 and 97.50 for potential breakouts after the news. Same exact process. We'll watch for it, break above, confirm the direction, and then buy on a retest. Wait for a break below, confirm direction, sell on a retest. So we'll watch those levels, and that's about all we've got for the day. There's a lot, this news coming out. There's really no reason to push it. We can wait for it to occur, and then post news we have our levels that we'll watch, and we can actually make our entries. So So there we have it. So with that, I'll go ahead and turn it over to Forex Joe and see what he'd like to impart for us for the morning and what his expectations are for FOMC, and we can go from there.
Good morning, Brian. Good morning, everyone. I've been sitting here kind of doing a little bit of research here as we get ready. I'm going to put out a report. I'll try to get it out no later than between 12 and 12:30 Eastern, New York time. That would be 11:30 Chicago, Dallas time. And we'll kind of have a midday report before the FOMC. So what I'm seeing right now is we're seeing, and if you'll check the chat, I put a lot of information in there about the chat. I'm not really expecting too much of a movement from July existing home sales. I think everything's kind of in status quo. And if you read the report yesterday, we talked about that 134 is going to have a little bit of an issue here. And as I take a look at the euro, we went to a high back up to 34.28. We've dropped all the way to 33.74. We're currently at 33.75, so we bounced back below that 3400. I talked about that in the fact that if we did go below 3400 to watch the area 33.90, 33.80, we've broken below that now at 33.75. So it's going to be interesting to see if the euro pops back up. There will be only one reason if the euro pops back up and heads back towards 3,500, ladies and gentlemen, and that will be the information coming from the FOMC. I personally am looking for it possibly to be much ado about nothing. I think there'll be a few spikes because everybody's anxious. You've got the traders that are trading now have their areas already located and where they want to place trades. So even if we get some movement in the markets back above 3,400, unless this is really a drastic a report, which I'm not expecting, then I would look for it to continue to bounce. So I think we're going to bounce in an area between 33.70, 33.75 area all the way up to about the 34.28. What will drive it down below 33.70 is that we're getting a lot of anticipation that this is going to be in a report where they're going to start talking about they're going to start tapering. Now let's take this into consideration. If you've been following me in the past, I've been talking about that it's not going to happen probably till November or December. In talking to some of the people that are still around, there's still a possibility that they could start tapering $10 billion here in September to kind of like use the analogy, since it's summertime here in the U.S., maybe just sticking your foot in the water and seeing how cold it is in the spring before you dive into the pool. So there's a strong possibility, and it's becoming stronger every day, that they will maybe start tapering $10 billion. Now, when you're doing $84 billion a month, $84 billion a month, which turns out to $1 trillion, $10 billion doesn't seem like that much. But what it will do is it will give what everyone's been waiting for a little taste. And if you use that analogy of just giving everybody a little taste, then with the speculation on tapering, it will make everybody feel good. And that's basically what traders are looking to do right now, is feel good as we get into what's going to happen this afternoon. One other key note that I've noticed is that the U.S. CAD has retested our high. Those of you that are getting reports, you know the number. Take a look at the report there, and it is the 2 or 3 channels above 0400. You know exactly what the number is. We went almost exactly to that number. Not that far pips, it's 0455. We've been near the 0450 area, and we're above 0400 right now. So we've seen the U.S. Canadian, which had not been moving that much of late, actually move about 60-some pips today. To me, that is kind of a little bit of a red flag for me to watch, in the fact that this means that everybody's expecting that this tapering is going to be full bore. So we've got the FOMC meeting that is going to happen in September. There's somewhere between 60 to 70% of the economists that believes that they are going to start the tapering. I did not believe that it would start until November or December because of what's been going on. It looks like now that we're getting favorable information that they will start the tapering and just give everybody a little taste. So if we give everybody a little taste, it's not like it's pulling the plug. And I hate to use this analogy, and I apologize if anybody out there has anybody that's been on drugs or has done drugs in the past, but once you get hooked on drugs or if you get hooked on prescription pills, you can't just cut off cold turkey because you break out into a sweat and you have all kinds of an effect. So they can't just cut this off right away. So basically, what they're going to do is they're going to start to wean you off and see what happens and see if they're able to participate and continue the process of tapering probably for September, October, November, December. So I, upon further review, uh, they're not going to do it to where it's going to be half or even all the way, but I do believe strongly that they are going to try at least a 10 billion and get this going. So if that happens, I think it'll be positive for the markets, even though it may be short term. I will do this report. I'll run through the news wires. There's a lot of information I could cover today. If you have any questions, you can pop in some questions there, but I've put a lot of information into the chat. We keep seeing that the pound yen, we have our number that we broke yesterday. We're above 153. The key will be, will we stay above 153 today? You see that the pound dollar, I put some information about it. We went right above 157 and bounced. It's only moved, hadn't moved that many pips today. I talked about the pound dollar at length yesterday about how it's slowed down. In fact, going into this session today, the last 4 sessions, it had only moved 67, 63, and 49 overall pips. I mean, goodness gracious. The last 3 sessions going into today, it seems like it's slowed down like the Canadian. Well, today it's only moved a little bit over 50 pips, with our high being above 5,700. Now, if you look into the report, the trade plan report, I show you what the highs were for the last 4 days. So we seem to be progressing just a little bit higher. But once again, what's going to be the catalyst of all this for right now is going to be the FOMC minutes. The reason that I'm expecting that no matter what is said, it will have a little bit of a push is because of the low volume, and you'll see people's reacting. You've got people who are trading that are ready. They've got their fingers on the button. They're just wanting to get some action in. And yet the big traders, they're gone. They have their traders in place. They have certain areas that they're not going to let it go. So you're going to see range-bound trading, I think, for the rest of this week. Also pay attention to the U.S. yen. Kuroda came out and talked about that they would continue to pump more money into the economy if needed. Going back to the euro-U.S. dollar, the U.S. dollar, Germany had some interesting news here that was not good. It's really not been talked about much, but there was a report today. Let me go back here real quick because this kind of slipped through. There was an announcement today from Germany, and I don't have it here in front of me. Of course, I never can find it when I'm going with all this. But whatever the report was for today, it was not really up to par to what they were expecting. And this is kind of going to put a little bit more pressure on the euro, because Draghi said last month that the Eurozone interest rates, which are already at historical lows, are going to remain at the present or lower levels for an extended period of time. So that was a key. So this report that just came out for Germany was the Federal Statistics Office. And everybody says, what in the world was that? Well, that shows the German PPI. And it measured month to month, fell 0.1% after staying flat in June. But they had expected it to go up to 0.2%, and for the year to date to 0.7 instead of just 0.5. So this is raising concerns that the recovery is still in trouble. It's unsustainable because of everything that's happening in the Eurozone. You're starting to see a few reports about the Eurozone's some of these countries, Greece, some of the others that are talking about, can we stay in the Eurozone? So you're going to start getting a confluence of events. We'll have vacation, the end of the vacations next week. Next week we'll be going into a slow week through next Thursday. Then you'll have the Labor Day weekend here in the U.S. After that, we'll come right back out with ECB. We'll come back with the Bank of England. We'll have non-farm payroll. We probably have an aberration. Now, you know that after non-farm payroll, we've had markets that have been slow the day after non-farm payroll. So for like the last 4 or 5 non-farm payrolls, whenever we've had information on non-farm payroll, that following opening of the markets on Sunday has been really slow. That may change because you're going to get some of the traders starting to file back in after non-farm payroll here the 1st of September. And between the 6th, which is non-farm payroll, all the way up to uh, the following week, which is the 13th, and actually that weekend, the 15th, that's when the major traders will be coming back, and that's when they'll be formulating their plans and getting ready for the push for September, October, November. Now, historically, we've had movements in the stock markets in October. I'm seeing some interesting traits is that if the stock market stays below 15,000 today, everybody write this down. I'm going to give you another hint. Brian was talking about that the stock markets is opening up below 15,000. We've been near 15,000. We've been above it. That seems to be the key area. I wrote, and if you haven't seen this and if you need to review it, get into the members area and go back recently where I talked about where the stock market was at 13,000 and the analogy between the U.S. dollar and the stock market at 13,000. You can use that same analogy with what's happening at 15,000. If the stock market stays below 15,000 today, and it continues in that progression, then anytime the euro passes 3,400 and reverses, just go ahead and play the way that we've taught you at the round numbers, okay? Because it is going to be another key along with the FOMC to be able to pick up some positive pips. So if you're scalping and day trading, you're in heaven today. You're going to have some movement. You're going to have some movement for the rest of the day in the U.S. session. It'll probably slow down here after news at the top of the hour. Then it'll pick back up probably the next hour going into the London close. After the London close, it'll probably be absolutely dead until 2 o'clock Eastern this afternoon, 1 o'clock Central. That's in U.S. time. The reason being because of the FOMC minutes. I'm not really expecting anything of huge significance here, but again, you have humans. You have everybody anxious looking for any little bit of information that they can come up with that might suggest that they are going to get an edge over somebody else with this tapering. So I've given you my analysis. I'll put everything together, put all this information on off the news wires. You'll be able to read it. I'll get it to you between 12 and 12:30, no later than 12 or 12:30 Eastern. New York time, 11:30 for the members. You can read that. You'll have a good, at least an hour, 45 hour, and a little over an hour to digest the information for those of you. Remember to use your rules of engagement if you're going to trade news events. Even if you have spikes, if you're scalping, good luck. But if otherwise, use your rules of engagement. And I just want to take a minute and congratulate Brian. Brian's been doing a terrific job. I've been in and out here for the last few weeks. He's been following the system. He has become very patient, very conservative, and he's been able to generate 200 pips. And I think everyone would agree that in any market condition, we keep continuing talking about being able to generate 200 pips a month. And if you generate 200 pips a month in any market condition, and you do it for a 3-year period, it will change your lifestyle. Well, Brian, during these summer months, did over 200 pips in July. He did over 200 pips, I think, last week. He did 25 plus pips yesterday. He's doing these live. Those of you that are part of TradeMate, Ricardo has came on. I would encourage you, if you're not part of TradeMate, get involved. He is a swing position trader like I am. There's going to be very, very soon where he's going to generate 500 to 1,000 pips where you can earn while you learn. So if you're not involved with TradeMate, I would suggest that you get involved. There'll be some small trades this month, and then next month it'll open up. I'm looking for October, November, and December, the last quarter, to be pretty much like we saw the end of 2012 going into the first half of 2013, where we had magnificent opportunities. We had two types of currencies that were special for Forex traders. We had the yen pairs, especially the US yen, going from 79.50, 80 all the way up to 104. So we had a trending pair along with the yen crosses. We had the euro US dollar that was a typical range bound trade in a 300 to 500 pip range. These ranges have changed a little bit. They've shifted. We're in the 130 to 134 range now, and now depending on exactly what happens with FOMC and next month's non-farm payroll, that will be the determining factor if the euro will bounce up to the 137 area or whether it will stay in this 130 to 134 range. I know pretty much what I expect it to do, and you need to just keep coming to class and keep participating on it and getting these reports, because I'll be happy to share. Make sure you read these reports daily. I'm putting a lot of effort into these reports. We talked about a couple of days ago that we were looking for a different week where liquidity was a little bit deeper and the volatility was enough to draw more global market interest. Well, we got our wish. Right after I wrote that, we had 16 of the 22 pairs yesterday that moved 100 plus pips. What was really fascinating about yesterday's markets was that we had the euro US dollar of the top 7 that we cover moved 128 pips. And as we alluded to earlier, the pound US dollar was the smallest mover yesterday at only 67 pips. So people are sitting on the sidelines with the pound dollar, but it is forming, ladies and gentlemen. It is forming for the next move, and that next move is going to be 500 pips or more. So if you want to be involved in that type of move, I would encourage each and every one of you to start coming to class on a daily basis. I would encourage you to get involved and stay involved with what's happening here in the live classes, because Brian is doing a terrific job following the system. He's not doing anything special. He does the same thing. It's repetition, repetition, repetition. He does it every day, every day, every day. He's doing videos. We've had training videos. Anyone can do this if they will apply themselves. And what we have found is that if you just give the Forex markets quality of attention, participation, you're going to change. The only thing stopping you from having success in the Forex markets is your attachment to money and the fact that you're inexperienced. But if you'd like to gain experience, stay involved with this. Those of you that's been trading for the summer, that have expanded your horizons, you're starting to see why I mentioned that back in end of May, going into all the way into June, for July and August, because you've expanded your horizons, you've traded a few more pairs, you've seen how these range-bound markets. Don't get caught up in the range-bound markets, because we all have a rules of engagement for range-bound markets. We all know that in range-bound markets, you're going to be wrong once when it breaks out of that channel. Get prepared for some trending markets, because the trending markets are coming. And again, let me just kind of re-emphasize that the fact that we had these type of markets for the first half of 2013, and we have it all documented in our boot camp. Many of you, along with our price action that I covered extensively in the last boot camp, know exactly what I'm talking about with the range-bound markets and the trending markets, and now you have been experienced to understand and see visually what these markets can do for you, and that's the only way that you become successful, is to participate, experience it, trade it in a practice regimen demo account, find 1 or 2 pairs that you can trade that will generate positive pips, come to class, follow the trades. I would encourage everyone to put all these trades in a practice regimen account daily. I would encourage you to do that with the trade plan alerts. I would encourage you to immediately get involved with TradeMate, because it is getting ready to happen. This is the precursor. I'll use the analogy of the National Football League. We are in preseason right now before our season kicks off. Normally, the end of July, last couple of weeks of July and August are the slowest months in the Forex markets as far as range bound. We're getting ready. We're in our preseason. Football season kicks off next month here in the U.S. Forex season kicks off right after Labor Day. So you're at an opportune time in an extraordinary period of time here that we are currently in under current market conditions to not only take care of yourself, but recoup anything that you've lost since 2007 in real estate, whatever you've lost in the stock market. This is why I love currencies. You have the top 4 majors, you have the top 7 pairs if you add the Canadian, the Aussie dollar, New Zealand, and you have some of the crosses to where we only cover 22 pairs. So, Brian, I'll turn it back over to you, and if there was any questions, I'll check the question box and I'll try to answer any of those. But otherwise, let's get ready, and I'll go to work on this report, and I'll get it out to everybody here in the next couple hours, my friend. Back over to you.
All right. Great. Thanks, Forex Joe. Thank you very much. Yeah, guys, so I think Forex Joe summed it up pretty well. I'm trying to be patient and not force trades. I just went in while Forex Joe was talking, and we're 4 minutes to news, so I've canceled my pound trade and euro trades that we put on. I'm going to wait for news, and then we'll enter from there. We only have an hour in these classes, so it's tough to always grab pips right in class. We're fortunate sometimes to pick them up, and we actually do really during most classes end up with some trades that produce pips, but it doesn't happen all the time. So I think today is one of those days, because of news, we're not going to see some opportunity until after the news occurs. I've given you what I'm going to be looking at following news, and we'll see how that plays out. I'll record a video later today and just show what we did or didn't do for the day as far as our pips are concerned. But ultimately, you've been able to see the formula that we use, the trading regimen that we use, and how we trade it. So again, there's nothing to hide here. We if we're successful, we're successful. If we're not, we're not. But we have a consistent method that we use, and it works out for us most of the time. And I love showing that and helping empower people to become better and more consistent traders. So with that said, let's go ahead and wrap it up. We're back here again on Friday, so I hope you guys will join us and see what we can pick up this week. Have a great one. We'll talk to you soon. Bye.